Howdy, everybody. Welcome to Liberty Call. Today is a Wednesday, hump day, June 12th, 2024. I am Raymond Dahlman, your humble host here at the Liberty Call. It is a beautiful day here in Colorado. Again, little clouds, but not too bad. Going to go outside and probably throw the ball a little bit from my main man, Jake, Chief Director of Security around here. But for now, we're going to talk about the financial news. We had Chairman Powell spoke a little while ago, so we're going to go through that, go through the markets, and maybe some more. I don't know. Anyways, if it is your first time watching Liberty Call, if you could give me some thumbs up, a like, share, subscribe, a follow, and press the notification bell. All right, let's go ahead and get into the numbers for today. The Dow Jones was down 0.09%, 35 points, closed at 38,712. And actually, let me bring up the chart here while we're... Yeah, this was the chart today for the Dow. It opened up. How many points was it up? It was about 330 points. And then just down, went into the red a couple times, and that's where it finished off. Weirdly, NASDAQ, was just straight all day. I mean, it did have a little volatility here at the end. Same thing with the S&P 500, same, just trucking along, but the Dow, for some reason, right down. So very weird. All right. S&P 500 was up 0.84%, 45 points, closed at 5420. The NASDAQ up 1.54%, closed at 17,610. The VIX was down 6.3% today. Wow. It's at 1204. And Astros are on TV right now. Day games just irritate me, unfortunately, because it just gives me a reason to be mad about the dumb stuff they do. So anyways, back to the markets. Let's see. Canada up 0.34%. Brazil down 1.4%, and Mexico down 0.27%. Over in Europe, Germany was up 1.49%, the UK up 0.83%, France up 0.97%, Netherlands up 1.14%, Spain up 0.63%, Italy up 1.43%, Switzerland up 0.78%, and Portugal up 0.4%. Russian exchanges both, actually, they were closed today. So we'll skip those. And the overnights, the Nikkei in Japan was down 0.6. Let's see, Australia down 0.51%, New Zealand down 0.06. In China, the Shanghai was up 0.31%, the Shenzhen Component up 0.08, China A50 down 0.07, DJ Shanghai up 0.23%, Hang Seng down 1.31%, and the Taiwan weighted up 1.18% for the day. All right, so those are the markets. All right, let's go ahead and move over to the market recap. S&P 500 gives up some gains, but record close in sight despite hawkish Fed outlook. All right, the S&P 500 eased slightly after hitting record highs on Wednesday as the Federal Reserve indicated only one rate cut this year, bolstered by cooler than expected inflation data for May. The Federal Reserve kept its interest rate steady and now projects just one rate cut for the year, as inflation is anticipated to remain higher than previously forecasted. Shocking, I know. Fed members now see the benchmark rate dropping to 5.1% this year, suggesting a single rate cut in 2024 compared to March's forecast of 3 cuts. By 2025, rates are expected to fall to 4.1%, up from a prior estimate of 3.9%, eventually declining to 3.1% in 2026. So what they're saying is that we'll get one cut of about a 0.25% this year. Next year, we're going to have, could be 4 cuts, but they're going to go down another percent down to 4.1 sometime before the end of the year next year. And then by the end of 2026, it's going to be down to 3.1% for interest rates. Now, again, these fools did not see any problem with printing all that money 4 summers ago. And, they didn't, anticipate it was going to create all this inflation. So do you really think that they can foresee out this far? I have trouble believing that. All right. The outlook was more hawkish than many had anticipated, according to Jefferies economists. The decision followed data showing U.S. consumer prices increased less than expected annually in May, with the CPI rising by 3.3%, down from 3.4% in April. The month-on-month reading also slowed to 0 from 0.3%. Oracle stock jumped 13% after announcing partnerships with OpenAI and Google Cloud to expand its AI infrastructure. The company also provided a strong revenue growth forecast for its 2025 fiscal year, boosting investor confidence. In other news, despite strong guidance and first quarter First quarter results, Rubrik stock fell 8%. Meanwhile, NEO's ADRs were flat after the European Union announced higher tariffs on Chinese electric vehicle imports up to 38%. Crude prices increased, supported by U.S. inflation data and positive global demand outlooks, overshadowing a bearish report from the International Energy Agency, which cut its global crude demand growth forecast for 2024 by 100,000 barrels per day. Data from the U.S. Energy Information Administration showed an unexpected rise in U.S. oil inventories, complicating hopes for increased U.S. fuel consumption with the onset of the travel-heavy summer season. Overall, the market displayed mixed reactions to the Federal Reserve's hawkish stance, inflation data, and various corporate developments. All right, so that's the news for today. Let's dive into the CPI information from May. This was written by Nate Gurzy, economic analyst at First Trust. So let's see what he had to say. In May, inflation data came in softer than expected for the second consecutive month, but the Federal Reserve is far from declaring victory. While there were significant progress against inflation from mid-22 to mid-23, consumer prices dropped from a 9.1% increase in the year ending June of 22 to 3% in the year ending June of 23. Inflation has remained stubbornly above 3% since then. The persistence casts doubts on the Fed's ability to cut rates in 2024. May's inflation was notably held down by a 2% decline in energy prices, driven by a 3.6% decrease in gasoline prices. Excluding the volatile categories of energy and food, core prices rose 0.2% and increased 3.4% over the past 12 months. Housing rents, both for tenants and imputed rental value of owner-occupied homes, led the increase in core prices. Housing rents rose 0.4% for the month and have been growing at an annualized rate close to or above 5% for 3, 6, and 12-month periods. This trend is expected to continue as rents make up a third of the overall index and have not yet caught up with the rise in home prices over the past 4 years. A subset of prices known as the supercore, which excludes food, energy, and other goods and housing rents, was unchanged in May. This is the lowest reading since September of 21 and a positive sign for the Fed, as supercore prices have shown no sign of abating since the Fed began raising rates. Supercore prices are up 4.8% over the last year and 5.5% annualized over the past 6 months. Despite recent good news in inflation data, the Fed seeks full confidence that inflation is trending sustainably towards their 2% mandate. This likely requires several more months of cooler readings before considering a rate cut. Moving too soon could risk repeating the inflationary patterns of the 1970s. Yeah, I think we're already on our way towards stagflation, but what do I know? I'm just some fool sitting in the mountains. All right, next up. Watch Live. Fed Chair Powell explains why cutting rates ahead of the election is not political, because we never have people who are political in in the government. All right. The Federal Reserve stance on rate cuts remains cautious despite market optimism fueled by recent lower inflation data. Although both headline and core inflation remain above 3% and supercore inflation rate exceeds 5%, the unemployment rate is near historic lows. Despite these conditions, market expectations and media narratives suggest a potential rate cut in September. However, Fed Chair Jerome Powell's statements have tempered these expectations. The Fed's recent meeting projected only one rate cut for 2024, revising down from the previous forecast of 3 cuts. Powell emphasized the need for greater confidence in the data before committing to cuts, pointing out that while recent inflation readings have been favorable, more consistent progress is needed. And again, we have not had deflation at all. We haven't had prices go down. We've just had the rate of increase slow down and come to a stop in some areas. So we're still, this much higher than we were, 4 years ago. But no one seems to really want to talk about that. Oh, let's see here. The Fed's cautious approach is influenced by the proximity of the September meeting to the presidential election in November, which adds political sensitivity to any potential rate changes. Despite market speculation, Powell reiterated the Fed's commitment to being data dependent and apolitical. Sure. Powell highlighted improvements in the economy. Go. Oh, that's going to be a double or a triple. Oh, you go, Jordan. Nah, he's going to stop at second. All right. You don't care about the Astros. I know I'm probably the only one here who does. And my wife next door in her office. Where was I? However, he warned of base effects from the last year's low inflation readings affecting current year-over-year comparisons. However, that while September remains an option for a rate cut, the decision would depend further on data, and he did not completely rule out a September cut. The Fed's projections include a slightly higher inflation forecast, which has pushed the expected cut profile out further. Powell also noted that the potential market reaction to the first rate cut, which could lead to significant financial market loosening, this necessitates a careful approach to ensure that cutting too early does not reignite inflationary pressures, jeopardizing the goals of sustained 2% inflation. Again, I don't know why we need 2% inflation. 0% inflation would be better in my opinion, but hey, what do I know? The Fed remains mindful of the broader economic implications and continues to prioritize long-term stability over short-term market reactions. Yeah, they don't know what the hell they're doing. All right, last up, also from Zero Hedge, this article, 3 states start summer with sound money policies. This comes to us via Shift Gold. All righty. In recent months, 3 states, Nebraska, Alabama, and Louisiana, have enacted new sound money policies aimed at improving their citizens' economic standing by making it easier and more advantageous to hold and use physical gold and silver. These efforts come after similar actions by 4 other states earlier in the year. Nebraska led this recent wave by passing Bill LB 1317 at the end of April. This bill excludes capital gains on precious metals from state income tax and explicitly excludes central bank digital currency from the state's definition of money, marking a significant stance against potential federal interference in monetary policy. Following Nebraska, Alabama passed SB 297 on May 20th, sponsored by Senator Tim Melson. This bill also excludes net capital gains from precious metal bullion from state income taxes, thereby reducing the tax burden on those holding bullion. Louisiana joined these states on May 28th when Governor Jeff Landry signed SB 232 into law, which takes effect in August. This law recognizes gold and silver as legal tender within the state and ensures that no one is required to and ensures that no one is and ensures no one is required to accept these metals for payment unless specified by contract. This legislation reaffirms 2 key principles: the recognition of gold and silver as money and the importance of voluntary exchange in determining the best form of money. These legislative actions come at a time of increasing inflation and economic uncertainty, making it crucial for states to empower citizens with more robust financial tools. By making it easier and cheaper to use and acquire precious metals, Nebraska, Alabama, and Louisiana are providing their residents with better means to manage inflation and potential monetary instability. These states are setting an example of proactive governance in the face of non-monetary challenges, helping citizens protect their economic well-being amid ongoing financial policy concerns. All right, sounds like good news there. Would like to see more people, it'd be nice. I mean, since gold and silver still is legal tender in this country, and the fact that you have to pay capital gains when you buy and sell it, that to me is just garbage. Anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to DSAFinancialGroup.com. All my contact information is there. I hope everyone out there has a wonderful evening, and I shall talk to you again next time. Adios.